Welcome back to the MD Investor, the channel where we talk about personal finance, setting goals, achieving goals, increasing our financial intelligence, breaking the cycle of generational poverty. We take responsibility for our personal finance because we realize nobody has our best interest at heart. Let's be honest, right? There's nobody out there that's going to care more about your financial well-being than you. It's a fact. It's a fact. There's no one that's going to care more about your financial well-being, the financial well-being of you and your family, and your personal freedom than you. So you might as well take responsibility because everybody else is busy about their own life and their own concern. You have to be concerned about your own financial well-being. So obviously, there's been a lot going on in the last 2 weeks. The last video we did was on the just the racial disparities in wealth when it compares to whites and blacks. We're going to continue that vein by looking at the racial disparities in the investing world when it comes to stock market participation. So I figured we'll look at this. We'll go through this article, and I just kind of want to get into the foundation of kind of why our behaviors are the way it is, right? And the consequences that it has. So this is a good article that I found, and I figured let's get into it. It's an article here in Investor's Business Daily, and it says, what investing in stocks tell us about the racial wealth gap. So here you see the bull, which is the symbol of the stock market, right? They have a bull down in the New York Stock Exchange, and there's a blindfold over his eyes. So it says a racial wealth gap divides Americans. Yet investing in stocks has never been easier or more colorblind. What hurdles still remain for minority investors? Okay, all right. So let's get into this. It says, anyone interested in investing in stocks can't help but notice the current stock market is far different from what it was a generation ago. But one aspect of that change, one that could help ease the stark U.S. racial wealth gap, gets little attention. Technology has thrown open many doors to the financial industry. Once an exclusive community of initiates and decidedly white and male. Today, virtually anyone with internet access who is able to scrape together some cash and courage can jump into investing in stocks. And I will say that absolutely true. In the old days, guys, before 1990, they said, where you need a stockbroker, with it was a high barrier to entry. You would need like a large portfolio. They wouldn't deal with you because you just wasn't worth it for them because you just didn't have a big enough portfolio. But now with the technology and the internet, it's really that barrier is pretty much gone. I mean, you have things like Robinhood, Acorns, where you can you have M1 Finance where you can start a portfolio for open account for like $100. I mean, so the barrier is gone, but what's left is the mindset that we have to break. Let's go on. Yet African Americans and Hispanic consumers have been slow to embrace this new era. Research still shows Hispanic and Black Americans investing in stocks at much lower levels than whites with similar incomes and education. So you can't say it was because of the income and education. When you take income and education and you make it similar, still Blacks and Hispanics invest less. They also lag Asian Americans, who outpace all of these groups when it comes to holding taxable trading accounts. Does it matter? Investing in stocks certainly doesn't guarantee wealth, right? Whether they say past performance is no guarantee of future results, but it is widely viewed as an important element of a healthy retirement plan. Healthy retirement plans, in turn, are seen as an important step to narrowing the racial wealth gap, right? So there's no guarantee that you're going to be wealthy by investing, but it's an important step to narrowing the racial wealth gap. Even investors who just kept pace with the S&P 500, right? We know the S&P 500 is the 500 biggest companies in America. If your investment has kept pace with S&P 500, they increased their invested capital by an average of more than 166% over every 10-year period since 1979. That's almost, let's think about it. 166% is essentially doubling, no, it's essentially tripling your money, right? Because 100%, if you made 100% return on your money, that means you doubled it. 166%, that means like you almost triple it. So that if you just invested it in a vehicle that kept pace with the S&P 500 like an index fund, in every 10-year period, you almost more than triple your money. Many minority Americans remain cordoned off from such stock market benefits. This is partly due to a history of discrimination and partly due to psychological hurdles carried in the culture themselves. We know about the discrimination, right? We talked about that in the last video. The discrimination where maybe they weren't allowed to invest. But part of it is the psychological hurdles, right? Carried in the culture themselves, right? There's nobody you know in your family who invested, who can talk to you about it. Nobody can talk to little Johnny and little Joanne or little Tyrone or whoever and tell them about this, right? So they grow up not having that, whereas in other communities, they're learning that at a early age, and they're calling it a psychological hurdle. Let's look at the stock market participation barriers. Technically speaking, today's stock market presents individual investors essentially no barriers to entry. We just talked about it, right? No barriers to entry. You can, as long as you have a phone, internet access, a couple of dollars, you're ready to go. Opening a trading account requires little more than a name, address, and a bank account information. Any 18-year-old kid with $500 or even less, in many cases, can launch an account and start to learn about investing in stocks. Brokerages ask very few questions about credit history, right? That's true. They don't ask about credit history, employment, education, or overall net worth, unless an account holder wants to use advanced techniques, right? Like trading on margin or selling options and stuff like that. Otherwise, they're not asking most of those questions. And while names can reveal whether an account holder is male or female, rarely, if ever, will a brokerage ask the client's ethnicity or race. So, is it fair to ask whether today's stock market has, at least some respects, become colorblind? The stock market itself is clearly agnostic whose money it is, said Melody Hobson. So they don't care whose money it is. She was the former DreamWorks animation chairwoman, now president of Chicago-based Ariel Investment. But while the market itself may not discriminate, and I'm using that term intentionally, the environment by which someone might come to invest can be discriminating. The stock market is a stepping stone for U.S. families working to join the middle class or move beyond it. But assets matter, and the racial wealth gap continues to increase in the U.S. Consider statistics from the Economic Policy Institute, a Washington-based think tank focused on economic issues facing low and middle-income Americans. The data show white middle-income households, those who are earning between $37,201 and $61,328 per year, they own an average $86,100 in assets. Assets average only $11,000 for black families and $8,600 for Latino families in the same income range. So they make the same amount of money, but the assets they have is dramatically lower, about maybe 9 times less as opposed for the blacks, and maybe about 10 times less for the whites. And that's people in the same income range, right? So you assume they're probably same education range. A 2015 survey by Ariel asked Americans with household income of at least $50,000 whether they own stocks or stock mutual funds. 86% of whites said they did. For African Americans, the number was 67%, so about 20% lower. Both of those tallied at improved, up 7% over Ariel's 2010 survey. Among Hispanics, a 2014 Wells Fargo survey found that 47% of participants would prefer to place money in no risk savings account rather than in stocks or various funds. That compared with 35% for U.S. investors overall. So for the Hispanics, almost half of them would prefer to put their money in a no risk savings account, right? Low risk, but also low reward, low return. Let's look at the causes of the racial wealth gap. The reasons for this racial wealth gap and reluctance to open trading accounts are nuanced, and the reasons often feel personal, even though they may be shared by many people across the culture. Discrimination has certainly been a root cause of the racial wealth gap. And if you don't have money, you're unlikely to buy stocks. Right? Let's be honest. If you're, living check to check and you have a lot of money, not much discretionary money, you're not really looking to buy stocks. Plus, if you don't know other investors or brokers, you're less likely to walk into ear-button to open an account. Also makes sense, right? You're just not as comfortable with the lingo and with the dynamics and with the potential benefit that you can get. You just haven't been grown up to feel comfortable with that, right? Maybe where you came from, they talk about the stock market as basically gambling, and that's what you have in your mental outlook. It's gambling. I don't want to gamble with my money. Until the 1990s, stock trades were done almost entirely over the phone, person to person, or through brokers. Commissions often ran into the thousands of dollars, putting the market out of reach of many. Brokers prioritize their clients partly on their financial standing, meaning the brokers would spend more time or energy with the guy with the bigger account, right? Because they're gonna get more commission from that guy, right? As opposed to the guy with a small account. That and other roadblocks turned many minority investors away from the stock market and toward other venues, such as real estate. And for many who were curious about the stock market, and this remains true today, Hobson said, the overwhelmingly white male world of financial advisors and other investment and banking experts can feel like foreign turf. Imagine that, right? You go into an office and all these people are white and you just don't feel comfortable. Does that person of color feel comfortable walking into that brokerage firm office or that financial advisor's office? Asked Hobson. Do they see people that they think represent the diverse society that we live in? Do they feel that somehow there are barriers to entry for them because of just the environment? Any of those factors can preclude investment, Hobson said. To be sure, the internet has changed the process of investing in stocks. It can be entirely private, right? All you need is, like I said, a phone, internet, and give you information, and you're off and running. It can be entirely private, pursued in small groups or within larger communities, chosen specifically by the individual investors. Fees for trading and various account services differ depending on how often clients trade, account size, or other factors. But people's names, how much they earn, and where they live have no impact on account fees or stock market access. Still, a visit would show that minority representation at the New York Stock Exchange remains low. Right? Whenever you watch your news and you're talking about they show the New York Stock Exchange and NASDAQ and all you see these white guys, most of these white middle-aged guys running around, right, and screaming. Nobody that looks like you, so you don't feel comfortable. I'm like, that has nothing to do with me, man. I'd rather put my money in the bank, but that's a mistake. A glance at data on financial advisors reveals a similar state. A powerful fact remains. Ethnicity and race affect whether a person is exposed to stocks and begins to understand the market at a young age. For minorities, that lack of exposure plays a key role in the racial wealth gap. That's what I'm all talking about. Educating ourselves so we can teach our children to break the cycle of generational poverty. For minorities, that lack of exposure plays a key role in the racial wealth gap. Our children are growing up knowing the stats of LeBron, knowing the stats of Kobe Bryant, and they know how many who dominated, what dynasty they were in, but they know nothing about front-loaded mutual fund, actively managed fund, exchange-traded fund, stocks, bonds, 401k, Roth IRA, the PE ratio. We know nothing about it because nobody talks about it, and we haven't been acclimated to that environment. Okay, and that lack of exposure plays a key role in the racial Wealth gap. Potential investors in the Black and Hispanic communities are often the first generation in their families to attain levels of income sufficient to allow them to invest, right? Nobody in my family that kind of knew of, we're talking about investing, and definitely not in the stock market. And you got to acknowledge that, right? So the information there's not going to be any information to be passed down. Nothing. Learn on your own. There's going to be nothing passed down. Risk adversity and the racial wealth gap. The desire to learn is there. The Wells Fargo survey found 72% of Hispanic investors wanted to know more about investing in mutual funds, stocks, and bonds. So there's a interest there, right? There's a desire there. That compared with 64% among U.S. consumers. Lack of familiarity with the concept of investing in stocks were a key roadblock, says Xochitl Leon, a Harvard-trained economist who heads Wells Fargo Hispanic Segment Strategy Group. Then there's the common preference for real estate and for no-risk savings account. This is a community in which we have higher risk adversity, Leon says, meaning, right, they think the stock market is gambling, right? And they don't want to risk it. Over the past 2 years, saving rates have accelerated among Hispanics, Leon said. But the group channeled an even larger than normal share of those funds into lower risk savings and non taxable retirement accounts. The money is essentially being socked away where it seems safest and most accessible. Let's go down to pensions versus 401k. Among African Americans, Houghton said that traditionally many of those with the most earning power had government or other jobs that provided pensions rather than plans like a 401k. Those pensions offered no pathway into investing in stocks, leaving prior generations with little or no investing knowledge to pass on. So they're saying the prior generation that had good job basically had a pension. And with a pension, basically, when you hit your 40 years and you get your gold watch, and you have a pension, meaning that you're gonna get a certain amount of money every month for the rest of your life. So, but they weren't really actively investing, so there was no knowledge to be gained to pass on. Now imagine this generation now, right? After 40 years of, say, investing in a 401k, and you've learned about actively traded fund. And you should avoid that because the expense ratio and the fees are higher, and it's going to eat into your returns. And you've learned about passively managed account and index funds, and you've learned about diversification, and you've learned about you've learned about the rule of 72, and you've learned about asset allocation. And as you get older, you should put more money into bonds. That's it. That's knowledge you're going to have to pass on to your children. But they're saying the generations before who had pension, didn't have that knowledge because they weren't really investing. They were just kind of in a pension fund, and there's nothing to pass on. That knowledge is not there to pass on. Online investing and education tools are helping to bridge those barriers. More employers also are offering 401ks. Okay, so that's going to help you to learn, and you have knowledge to pass on. Okay. Also with the robo advisor, like I said, Acorns and Robinhood and M1, they're the lower barrier to entry. Let's go on to demographic trends and investing in stocks. Banks and brokers like Wells Fargo that are attempting to build their Hispanic and minority clientele are seeking ways to marry the two advice models. The two advice models are basically the robo-investor using the technology in low barrier to entry. You can invest with a small amount, and the investor or the advisor model where they are giving you advice for a fee, usually a percentage of your assets under management. They try to merge those two. The goal, Leon said, is to make it accessible but provide one-on-one guidance at the early stages. Most brokers provide simple online tutorials on using their investment programs and understanding how the stock market works. And that's true. A lot of these brokers you go on, whether it's TD Ameritrade, they'll have information for like beginning investor, how to invest, and little 5-minute, 10-minute video to really help you increase your knowledge. E-Trade, all of them will have that. Let's see here what we can get out of this. Basically, they just basically said that the trend is, Americans under age 55 are now the majority. Basically, the America is getting, even though they have a lot of old people in America, they said Americans, younger Americans over age 55 are now the majority of the population, meaning they make up more than 50%. And because of that and their tendency to be more tech savvy, that's what sometimes pushing what they call Generation Z, basically pushing the market to become more friendly or tech savvy for them. That's why now things that they have now would not have available 10 years ago, right? 10 years ago, you weren't able to pick up your phone and have an app to M1, an app to this and app to that and buy stocks. And you didn't have that, okay? So you can see because the Americans getting younger, and it says right here, all the growth in this young population nationally and in a lot of states and in a lot of metropolitan areas is due to racial minorities. And a lot of these young people are not white, essentially. Okay? And these are going to be the future co-workers, the future investors. So that's why a lot of these companies are trying to gear towards, listen, we have to get these people started investing early. Okay, let's go look at let's go over here. 401k plans as stock market gateways. We kind of went over that already. Where as you begin to invest in your 401k, that's your gateway into investing. After you reach your employer match, and you say, you know what, I've maxed out on what I can invest in my 401k, but I still want to invest. So then you're going to open a taxable brokerage account, right? Now that you've learned and stuff like that. Let's see here. One factor that does appear consistently across the Ariel, Wells Fargo, and FINRA data is the effect of 401k accounts. Access to an employer-sponsored retirement plan is highly correlated with having a taxable investment account. Basically saying you're more likely to have a taxable brokerage account if you already have a 401k account, right? Meaning you feel comfortable, you kind of learn the lingo, and you feel comfortable investing, right? In other words, Matola said, employer-sponsored retirement plans are a gateway to taxable accounts. The connection between 401k and investing in stocks has gained importance. The 401k plan is seen today as the main financial instrument supporting retirement. Reliance on pensions is fading, and Social Security income is viewed as increasingly risky. Right? So a lot of people say you're on your own. You're on your own, man. Right? There's no more pension, so we're investing in 401k. And you know that a lot of people have no faith in Social Security. Right? They said if it's there, it's gravy, but I'm not depending on it. That's why people are doing stuff on their own. But race and ethnicity also affect attitudes toward employer plan and matching programs. Surveys clearly show apprehension and lower participation rates even among younger employees of color. A lot of people I know, guys, who just, they said the average white person started investing at about 35. They started taking stuff seriously. A lot of us, we said, what? We got to give $500 a month? Oh, man, I can use that money, for myself. No, don't take my money. And we just don't, take it as seriously. We just don't realize the power. Hudson encourages companies to look at their 401k plans by race. Time after time, she said, you can see these racial differences that lead very quickly to a sense that something needs to be done to fix it. How to start investing in stocks. Investors looking for places to start investing in stocks have various options, depending upon their concerns, goals, and where they're getting started. They should keep in mind several basic facts. Foremost among these, there's a learning curve, like we'll talk about, right? And we can try to get ourselves educated. But there's a learning curve. It takes a little time to really get the lingo, feel comfortable. And the person you are now is going to be light years away from the person you were a year ago. I just see it in my own self. If I knew now what I knew 5 years ago, man, I'm telling you, night and day. They should keep in mind several basic facts. There's a learning curve. Learning to invest takes time and effort, but the payoff, particularly for those who start young, can be substantial. Start by investing a small amount of cash, right? Whether it's $10 a month, $100 a month, like I said, M1, $20 a week, whatever you want to do, just start learning it. or create a paper account that by themselves real stocks in an experimental virtual account. I think TD Ameritrade had that, something called like paper trader or something like that. Let's skip down here. Education programs for beginning investors. Matola said uh, FINRA does not directly address most of its outreach programs towards specific cultural groups per se, but it does gear many financial and market outreach programs directly to lower income consumers, many of whom are most directly affected by the racial wealth gap. Those programs include partnership with libraries, the military, Native American communities, and youth groups. Our actual education programs are written for all Americans, although the channels that we often use to disseminate that education will often hit minorities at a greater rate than non-minorities, Matola said. Reaching such groups is a big deal, Hoffman said, because you're talking about the difference between retirement security and not having retirement security. You know, they give all the numbers about people are not investing in retirement. And the amount they have saved in retirement is like the average American made about, I don't know, $10,000, which is just not enough to have a comfortable retirement, right? It's not fair to work your whole life 50, 60 hours a week, you know, going to work on time and overtime. And then when you come to your golden years, quote unquote, you can't even retire because you didn't do the thing that was necessary to get it done. And now you have to go and either have a very non-ideal retirement that's basically depending on Social Security. You know, the stuff, the dreams you had about traveling out the window. I mean, you can't travel living on Social Security, all because you just didn't invest. That's why this stuff is very important, guys. Um, and Americans who don't have retirement security are more likely to become a burden on society, she said, right? Because then there's consequences, right? Because if you haven't prepared yourself for retirement, you're going to have to depend on your children. And then they're going to have to take care of you. And then because they're taking care of you, they are not going to be able to prepare for their own retirement. And so it continues. And we're talking about breaking the cycle of generational poverty. So guys, so just another video to let us know. We know there's a lot of stuff going on, and there's a lot of racial disparity. We know there's racial disparity in criminal justice system, racial disparity in the way we're treated by the police, and because this is the financial channel, we're talking about racial disparity in the stock market, in involvement of blacks and other minorities versus white. We have to break the cycle. We have to begin to teach our children, guys, talk the lingo, and get them involved in it at an early age. So then when they come to be 18, 19, 20, it's not going to be a foreign language. So no, mom and dad have been talking to me about this for years. I know I have to invest. I know I'm going to invest in an index fund. I know I have to start early. I know the compounding is going to be great. If I start early, I'm just gonna be light years ahead of people who start at a later age. So this is the MD Investor Guide, again, with another video to help us break the cycle of generational poverty, increasing our financial IQ, teaching our children so we can break the cycle of generational poverty. And we are going to continue to grow and learn. And I will see you again, guys, on the next video. Guys, just remember to definitely hit the subscription button so you'll be notified when new content comes out. And I will see you in the next one. Just remember to continue to command your money to grow.